All right, it's nearly been 3 minutes, so let's go ahead and get started. So I just want to do a quick and succinct live stream, but full of information. So let's get started right away. So as you guys can see in the title of this live stream, right, it says CPI report to move SPY lower. So what do I mean by that, right? So do I mean that I am completely switching up my perspective to a bearish perspective? No, right? Because again, everyone should know this by now. The entire markets are moving up. Okay, you guys can clearly see that on the weekly and the monthly time frames, or just simply on the daily time frames. All right, but the weekly, before the year ended, 2023. We've had 9 consecutive weeks to the upside. That is very bullish. So again, I'm going to reiterate this as many times as possible. I am not bearish in the long term. We are very much bullish in the long term, not bearish. So what am I saying now in the title above or below? Okay. I'm stating that the S&P 500 is needing some good consolidation, and we saw the first sign of slight relative weakness last week. And so today, okay, after today's and yesterday's price action, okay, the market has been giving us some very good opportunities, as we saw a lot of choppiness, but we were able to pinpoint where the money is going to for laggards and leaders in different sectors, and we've been able to play that out very well for the first almost 2 weeks now of this new year. All right, so in the first week, if you guys didn't know, but the members and I, the students, have been able to correctly navigate in the first week that value names, specifically healthcare names, were going to pop, and then this week we saw that that rotation back, that flow of money back into the leaders, right? And that's the reason why we focused on Apple, Nvidia, and another little lesser known name, IoT. Okay, IoT. All right, so AAPL, NVDA, and IoT were the 3 specific tickers that I had for our swing trade ideas in the CFO Swinger Watch newsletter. So again, if you guys want to join, make sure you guys DM me, because I have a special discount code for you all. It's a forever discount code. It is not just 1 month or 2 months. It's a forever discount code, right? And I like to get that out to people who take the time out of their lives to be able to, DM me, right? Just DM me and let me know that, hey, I want to join the group, which is an amazing group, by the way, amazing group of traders, a community of traders, and obviously the newsletter provides a lot of value every single weekend. So it's not just trade ideas, and you would know if you join. Right? So the S&P 500, again, back to the topic here at hand, it looks really good, right? As simple as that. It looks good. It looks like we'll be going to the upside again. However, there's one thing that is currently concerning me: volume. So the volume has been stepping lower. And even with the move from yesterday, including today, even though today could have been an inside day candlestick, which it wasn't, even though I would have preferred to be, but even with this bounce and this reversal to the upside from yesterday's move and today's move as well, the volume is consistently getting lower and lower. So this tells me one thing: this buying is getting less interest compared to the buying that we saw back in, I don't know, maybe even back in October, maybe even in late September, right? So these volume bars are getting smaller and smaller and smaller as we're sitting at the highs of 2023, the year-to-date highs. So that's clearly a warning sign for me. Like, you don't need anything else. The volume bars are clearly telling you a story. So even with a large move up like yesterday with a really good price range, we moved 6.68 points, $6.68. That's a large move. That's a pretty wide price range. And instead of getting a large volume to back up that big range in one single trading day, we got lowered daily volume compared to last Friday's daily candlestick and volume, right? Even the price range of last Friday was a lot smaller, right? Even just a percentage return on Friday was 0.14%, and yesterday was 1.43%, almost 1.50%. Right? So this clearly indicates that the markets are losing the buying interest. This means a lot more people are slowly getting out of trying to buy at these highs. Even one good indication of this is insider buys. Insider buys are slowly dying down, and instead, we've been seeing a lot more insider sells. We saw that leading up into the end of the year, which makes sense. There's a lot of people who, do some tax loss harvesting, but at the same time, they do like to sell end of the year, especially when we have the market sitting at highs. I mean, it's a pretty simple concept where they're buying low and selling at highs. And these big institutions or big, people with big positions, in the company are huge stakes in these companies are doing the same thing, right? They're still using the same methodology, right? Methodology. But it's interesting to see as the volume continues to get lower as we're now heading into the most important part of this week, the last half of this week, which is on Thursday and Friday, right? CPI report comes out, the first ever for this year, which is also going to be the December's inflation report, right? And then on Friday, we get the PPI report as well. They're all equally important, but again, the core CPI number is the most important because that is the data that the Federal Reserve uses to gauge the overall inflation and what's going on, and basically, most importantly, how they're going to act and then what they're going to be doing to the rates, the benchmark rate, the federal funds rate. So again, I talked a lot more extensively about all of this in my newsletter this week that I sent out on Sunday night, as I usually do with my subscribers, my students and members. So make sure you guys DM me if you guys want to read that. But again, it's really important to understand where the market stands right now, including with the added on fact that the buying momentum and interest is falling down. How do we know this? The volume. Okay, so here is now what I specifically think and speculate as we head into Thursday. There is a chance that as we continue to see lower volume every single day, well, that also means the average volume is going to what? Top out. Right? I mean, it's doing that right now. Right? If you guys take a look at this here, the volume is dying down. Okay? And so as the average volume line continues to top out somewhere by the end of this week, we will eventually see that curvature down as we get lower volume. And ultimately, once we get that lower volume, we should see a pop in buying volume? No, selling volume. Right, we're going to be seeing a pop in selling volume because, right now let me go right back into what I was saying before. Okay, so remember that, guys. Remember what I just said about the volume. So heading into CPI, so tomorrow, it's Wednesday, right? So tomorrow I'm expecting a lot lower volume, potentially even a inside candlestick relative to today's candlestick. And today's candlestick, it was a pretty average range for the S&P 500 and kind of how it moves, but we can be seeing even a tighter price range with an association of the volume being a lot lower as well. So that's one possibility, but the second possibility, which I think could be most likely true tomorrow, is that we continue to head higher with slightly higher highs and higher lows compared to today's candlestick. So today, okay, let me talk about today now. Today's candlestick could have been an inside day candlestick, but it ended up moving above Monday's high of 474.75, and today was 474.93 by only a couple of cents. So based on that data that we have now, I can safely assume that tomorrow, if we do have that tight price action, and if we do decide to make a higher high again, but on the backdrop of lower volume compared to today, we'll get number one, tighter price range. Number two, we'll get a higher high, but a very close higher high compared to today's high of 474.93. So that means literally there is a possibility that we can see 475.00 being hit, which will make it an official higher high, and then seeing really tight price range consolidation throughout the rest of the day. That is a completely speculative take, but that can actually happen based on what we're seeing right now and based on the volume that we're seeing. Again, the volume is important. And so that leads me into Thursday. So Thursday is when we have our actual inflation report for December. Okay, it's lagging by a month. And so, but when the inflation report comes out and we do see yet again, another lower inflation data. Okay, we can possibly see a pop in the market, pre-market, with a very nice, small or big, I wouldn't know that at this point now. Whatever the gap up is, we can get a nice gap up, and then that will be our blow off the top. And as we get our final economic news, okay, on Thursdays and Fridays, on Thursday and Friday of this week, we'll see that jump in selling volume. Because again, the buying interest is consistently slowing down. There are a lot more buyers who are starting to be less bullish by not buying or by selling off whatever long positions that they've been holding since this new year started, right? Or since they've been holding since, who knows, maybe ideally, they caught the bottom in October 27th, right? Who knows, right? So that is something to consider this week, and that's the reason why I believe SPY can actually move lower and start its trajectory to the downside as it continues to consolidate with more of a downside risk. All right. Again, one more time, I'll say this the last time here for this live stream video. I am long-term very bullish, short-term consolidation with a little bit of a downside risk. Okay, that's exactly what I want to purvey to you guys and convey. Okay. So again, we want to make sure that CPI gives us a blow off the top sell-off event, right? Because so far the markets seem to be pricing in a better than expected, or at least the data coming out within expectations, right? And the market has been slowly moving towards a more, well, in that specific favorable situation where the inflation data is either lower or at expectations. All right, I mean, we've been seeing this happening with the price action from yesterday and today. So if that news comes out, which is the reports, right, which are the reports of CPI and PPI, then Thursday will be very much telling. And that means, as you guys should know by now, on Thursday when we do have our live stream, we will know by then. Right? We will eventually know what would have happened, whether or not I was correct with the analysis today. But you know, things are getting very exciting, right? Things are getting very, very exciting. We already know that VIX has been compressed yet again into this first half of this week, right? VIX. So there's a chance that we can be seeing a higher low again on the VIX. Okay, and the value that it closed today was at 12.77, which is really close to 12.70, which was a kind of a support area for VIX for multiple times here. In the first pop back in December 20th, and then our second pop back in December 29th into the new year as well. All right, so this is telling us that, you know, we're about to see some volatility. All right, we're definitely about to see some volatility, which makes sense as the market is getting ready for such major reports to come out for the first time of a new trading year. All right, it's to be expected, basically. All right, it's to be expected to see that potential volatility coming up with these major economic reports that are very important for what the Federal Reserve will do for the first time this year in their first FOMC meeting in this month. Okay, so now to kind of bring everything together, okay, right, I want to come back to what I said earlier about the fact that long term I'm bullish, but short term I want to see consolidation. So now, if you guys have been following me, I've been saying that there is a chance that we can be seeing potential moves up higher into January OPEX, which is the 19th. However, depending on how we move on Thursday and Friday and how we close on this week will completely determine what we could be seeing, potentially be seeing into January's OPEX, which is next week. It starts next week. So again, overall, we're starting a seasonality trend of choppiness. Right? I have highlighted this multiple times for my members and for all the readers of the CFO Swinger Watch newsletter, especially this week. So it's essential that you guys understand that consolidation will mean chop. All right. And again, my opinion is that we'll be seeing more downside risk. We'll see that consolidation skewed to the downside, right? And again, I gave you guys all the reasons to have you understand why I'm thinking that earlier in this live stream video. Okay, so again, overall, longer term, short term, but heading into OPEX and heading into the seasonal weakness of February and into March, right? The usual seasonal weakness of quarter one of any new trading year. I expect SPY to at least see a possible retest of 460 and eventually possibly even hitting the lower range of this new support area or demand area of 451.50. Right? This is the lower range here, and the top range is obviously 460. All right. Okay, so that is it for this live stream. Again, I want to keep it short, but I really want to get straight to the point without beating around the bush. So hopefully this is a very good insight into what you guys should be preparing for heading into Thursday and Friday of CPI and PPI reports and what the markets can potentially do, especially tomorrow. Right, I gave you guys my entire technical analysis of SPY and importance of seeing the price movement associated with the volume as well. All right, have a great rest of your night, and I can't wait to see what the market has in store for us by the time we have our next live stream on Thursday. Same time, 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. All right, have a great rest of your night, and I'll see you guys on Thursday. Thank you so much for watching.